In ES futures trading, a bullish engulfing pattern is a strong reversal signal where a small red candle is followed by a larger green candle that completely engulfs it, suggesting buyers are stepping in. A bearish engulfing pattern occurs when a small green candle is overtaken by a larger red one, signaling potential downside pressure. Meanwhile, a bullish harami pattern shows up when a large red candle is followed by a smaller green candle that sits within the previous body, hinting at a possible pause or reversal to the upside. The bearish harami pattern is the opposite, a large green candle followed by a smaller red one inside its body, suggesting a potential shift to selling pressure. Welcome KT, who's here to demonstrate how to confidently trade these powerful price action setups, bullish and bearish engulfing, as well as harami patterns, without using any indicators, purely by reading the rhythm of the market.
Hello traders, welcome back. Today we're going to talk about how to trade pure price action, and then we can add some levels where we can use these levels for a 3-point stop loss and trigger entry points. Using same price structure overlay. Next, we can also add volatility context and these structures to make an excellent trading choices every day and control the risk profile of trading. So let's talk about the fundamentals of some engulfing patterns, which basically is telling us the power of buyers or sellers in the market. And if you think in terms of that a seller was trying to capture the market, but it was totally rejected, or the buyer was trying to capture the market, but he was totally rejected. How can we see that? Just without looking inside the bar, that is the topic of discussion. So let's mark these patterns we see. Now this is an engulfing pattern, as you can see. All right. Why is that? Because this big bar right here, I'll just offset it here. Well, let me just maybe not use this, just use the lines. So this big bar where I'm placing this line structure, this is your engulfing, because it has engulfed the seller bar completely. It has overshadowed. So this one is saying that market was trying to come down here, but this was totally rejected. And look at this bar was trying to become, first of all, there's a tail as well, right? This is a bullish tail at the bottom, and it was totally red at given point in time, because if you look at this small bar, it closed here, next bar opened here, it went down trying to crack open and initiate a short move, but it was rejected, and it closed with such a strong bias that the prior bar has been overshadowed. This is your bullish engulfing pattern. And once we see this, we know that we can take a trade. How do we enter the trade? We can explain that. And now we can see when the market comes back into these levels, we can see they are being defended. None of these attempts to close inside this bullish engulfing bar range were successful. None of them were successful. How do we know? Look at the close. Look at the close. All of these were rejected. Not a single bar was able to close inside this territory or below this range. So we don't know that. But when we know this was the initiative move done by this bullish engulfing, there are two things we can do. One, take this initiative move or wait for the retest, expecting a rejection first, retest rejection. All right, so that is the look and feel of the bullish engulfing pattern. It doesn't mean every time you have a bullish engulfing pattern or a bearish engulfing pattern, it works, right? So we have to be cautious about that. There are so many patterns. We just want to look at this pattern you see here is a bullish Harami pattern. These two bars where we have this opposite color bar, what is happening here is this guy was trying to push the market down. Again, coming back into this whole context, he was not able to reach there, and what happens in the next bar? We get a Harami, like a pregnant lady bar. Now it can also mean different things based on the location of this bar, is on the top side or bottom side. This is almost covering 66% of the whole bar range, and it is strong bullish. This is your bullish Harami, again a bullish pattern, but coming from the context of this potential area where it can be defended. So this is also same thing. We have this bullish engulfing right here. This one, if you look at these two bars, bullish engulfing pattern, and again with the context of this guy initiated the entire move, it is being rejected many times, right? This, after these rejections, we having an engulfing pattern. Same thing happened here. These two bars, after being rejected, not being able to close, you have to watch the close, you have to watch the tails in the context of the range, and this is also another bullish engulfing pattern. So bullish engulfing pattern here, offering a support range, right? So this engulfing pattern is offering another set of supporting system right here, right? And then we are getting off this supporting system. This range of this bullish engulfing is what I'm calling a supporting system. Let's put it this way. We have a strong close out of this coming from the rejection of the same area. So this is a bullish pattern of Harami. This is a bullish pattern of engulfing. This is a bullish pattern of engulfing. What is this one? See this two bar pattern, right? Same thing. It was red bar, opposite color bar. Again, this is Harami, bullish Harami. Again, a bullish pattern. All right. So if you want to take a long here, what we can do? We always want to go with 50 of the rejection point in the subsequent bar. What does that mean? Let's check it out. This bar right here is your breakout using the bullish engulfing. So our best bet is, I will put the price scenarios on top of this, but let's understand, if you're new to trading, 50 is a great way to approach it. So this is the bar. It went here, came here. When it is at 50%, next bar, because this is a confirmation, this has no tail. This is just, if I bring this together into 10-minute bar, it'll be one big bar. Because we are chopping these bars in time space. If I do a daily bar, it'll be one big bar, right? If I do 10 minutes, because this is a 5-minute chart, it'll be 5 and 5. If I do 10 minutes, it'll be one bar. All right, so this bar broke out of this, all right? And we don't know it's going to come back down crashing or not. So once we see this, understand there's a big, huge tail. We have this breakout. Next bar, 50% is a good approach to taking the trade. Okay, long. Market came down huge with this again. When we see this is now a doji. This is a balance bar actually. Came down and it is doing a balance bar, but people can see this, right? We don't see the number of contracts being traded here, which initiated this move. It's quite a big move. But once we see this, now what kind of pattern is this? This is a 3-bar pattern, but we're not talking about those things. But let's stick with this 2 pattern right now. Same thing happens here. We see a bullish harami. Once you see this 2-bar pattern, this is a breakout pattern. This one, since it is engulfing, it is, think about like this, is what is happening. It's like coiling and compressing. But this is a bullish pattern coming from the area of rejection. It has started the initiative move, came back, rejected. It is close to this area. When you see this pattern, most likely we can see it's gonna go either this way or that way. But this is a bullish pattern. We're expecting it to go on the upper side. And how do we know how to trade it? Well, that's the same thing. This is the pattern, 2-bar pattern. Half of this bar is right here. We go long again here on the pullback, right? This is it. On this next bar, now this is a 3-bar pattern. We don't have to worry about it. Now this is the same thing happening here. Now this is engulfing again. This is engulfing. This was harami, bullish harami. This is bullish engulfing. We know when we see we only know this when the bar is closed. And we need to see if the next bar comes at the 50 of this bar, which comes again, and also it is our supporting zone for today. Again a long pattern. Again a long, right? A long from here, 50. Here also long from 50. That is it. All right. So these are all the long patterns we can see. 50 is the key. Understanding 50 is a critical number. All right. So let me, before I go there, so if I want to take a shot, where is the shot here in this? All right. Where's my shot? Well, let's see. What pattern is this? This is opposite color engulfing. No, this is harami. Just like this guy was a bullish harami, this is bearish harami. So it breaks, it never comes back to 50 of this bar. It comes here. Short. Short and short. We teach in level 1 another kind of patterns called banking bar, quarter patterns, but These are standard patterns. Now let's talk about 50. When you see a big bar like this, and you see market is coming back to 50, and this is also retesting this bar. It's a good long again. When you see this big bar, the 50 is here, right? So where's the 50 of this bar? Somewhere here. So market came up all the way. Do I see any pattern here to trade? I didn't see any pattern. So this is 50, but that's the whole point. If you want to start with the basics of trading, identify the pattern and go to 50 after the confirmation is done. So which pattern is this here? There is a pattern here, but not what you think it is. Based on the two patterns we're talking about, Harami and engulfing, this is not any of them. This is another pattern. But if you think, okay, hey, this was almost the same, but let's look at the body to body. This is bearish engulfing. Opposite color, is this almost engulfing the prior pattern? If this is a bearish engulfing pattern, now we want to talk about 50 of this bar, the bar which makes the engulfing right here. See that? Then we can go short, and now we go on the other side. So all the trades would have worked out very nicely if you followed a simple bullish and bearish two patterns only. This is ES 5-minute chart. So let's do one thing now. Let me get rid of all that. Now we know what these are. I hope you can use it in your lifestyle of trading. So let's add one indicator here. Now I added a price grid. It makes sense to add a price grid if I'm just doing nothing else. No oscillator. Oscillators we use way in the end if you need to. It's just pure supply demand, as you can see, right? All right, so okay, so now can you see something? Let me explain something. What are you looking at? This is the 3-point grid, 3-3-3-point grid. It could be a little bit up and down if you have a few ticks, but assume this grid is broken into 3, 3, and 3. Okay. Actually, this is 3, 3.5, and don't worry about it, right? Just assume this is 3, 3, and 3 without getting into complications. So what I have done here, I have broken down this price movement into structure of 3, 3, and 3. Next one will be, this is also 3, right? This is 3. Let me just mark it for you. 3, and this is 3. I'm just stretching it just to show. Same things are happening here, right? 3 and 3 and 3. If I want to take a long, which price level do I need to take a long? Now the question becomes, which price or levels right here should I use? If I take this line for long, this line for long, stop loss is 3 points, and I'm going double 6. I mean, if I keep going, we don't know that. So this is where the pattern comes into picture. Same thing right here. This is a 2-bar engulfing pattern. Now this engulfing pattern gives me a range that, hey, which one of these should I be trading? Where's my stop loss? The question of stop loss and entry is right here. Let me change the color. If my entry is here, as we explained just a few minutes back, If my entry is here, my stop loss is this much. If my entry is here, stop loss is this much. So I'm just creating some, let me create some coloring. So let's assume that this is going to be blue, 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 and then coming down, and let me just move this over. Okay, that's it. Let me move it here, this, okay. So these boxes, now you know what they are. So there are three colors right here, red, yellow, blue, red, yellow, blue. And there are some other lines here which has other meaning because this is a bigger one. There's some internal mechanism we do professionally, but don't worry about it right now. Okay. So this is what it is, right? So why is this of interest to us, this area to trade? Remember this, engulfing pattern, right here, see that? So what I'm saying is when you come inside this pattern, which line are we going to trade? Are we going to trade this line, go long, stop loss is here. If it comes here, stops me out, again, there's no oscillation, nothing else, just pure price. What are we expecting? We're expecting it, if it comes here, now there's going to be another overlay which is coming on board pretty soon about converting time to price, which will qualify which levels are hot for the day, minute by minute. But that is for next presentation when it comes out. But here it is. So if I'm entering here at the top or the bottom, I take one contract here, I two here, and my stop loss is here. If I'm a 3 contract trader, I'm looking for 1 to 5, 1 to 10. Just go to the moon. All right, so you got the idea, right? Okay, so now let's talk about this guy. We talked about this 50 right here, right? This bar, we said this is 50. Now you know this is engulfing, bearish engulfing. It comes in, this is the confirming bar. And this is a 50. So we want to take a short here. Stop loss is here. This is bar. This is almost 3-point stop loss. 1-to-1 scalping. If you want to do 1-to-2 scalping, 1-to-2 scalping is much better than 1-to-1. But whatever the rules you have to follow, you have to follow. Now this is again. So now this is a reversal, right? We're coming inside the levels, we are reversing. Coming inside the levels, we are reversing. Okay. With the patterns. We also talked about this is Harami. Normally it would have been nice if it was below, but it's okay. And what is happening? It comes back to 50 of this confirmed pattern. Which line is sitting there? Blue line, right there. Right? So you can, it did not touch all the way, but it's okay. But we know. So this is giving me context, okay, what is my stop loss is going to be. So I can go to this dotted line, right? This is what these exist. So if you miss by some dot, we can go down by some point just to keep the risk controlled. Keep the risk controlled. And you should be happy that, hey, when I click on some area of interest, my losses are confirmed. I'm not going to do anything. I'm not going to get into panic. So I should be able to accept that loss. If you're not able to accept that, trading is not for you. And now we're talking at a very easy methods of trading. Don't go directly on, oh, this yellow line works, this line always. Yeah, all lines will work. They're just price magnets, but you need to put it in the context because you don't know what this chart is really doing behind the scenes. All right. Okay, cool. Thank you very much of understanding and accepting these two patterns for trading. And then we have also introduced this overlay to make our life easy, right? Now let's talk about 50. We were talking about 50, right? So now this, see a big huge bar on any bar, right? Now this is another pattern. Again, I don't want to get into candlestick patterns. So there are a lot of books out there you can study, but this is again a pattern. 50 is right here, yellow, right? This is off by a one tick or so, but this is how it is, right? So if this is a big bar, 50 is right here. Now this is a big bar. This is another pattern. 50 is somewhere here. It never went there, which is okay. So this is now if this is a banking bar phenomena, which we teach, if it is a banking bar phenomena, which I think it is, we have entry here, we have entry here, here, and here. We enter, and this is a stop loss area. So this is how the price grids really overlay helps you when we have the right context.